Good afternoon, everyone. Good afternoon, everyone. Good afternoon, everyone.
Good
Good
afternoon, sir.
afternoon, sir.
Sorry, there were a lot of today morning I could not engage your class. I had a lot of other activities to be done. Uh, Tomorrow morning, okay, I want to meet everyone since those who have taken HR and marketing people. Okay, tomorrow morning at 9. Uh, I just want to meet you for 5-10 minutes. Okay, and then I will take my regular class. Okay, but I want to meet all those people who have taken HR and marketing. Okay, so anyways, are you able to see the screen? Are you able to see the screen?
No, sir.
No, sir.
Just a minute, give me a minute. Now are you able to see the screen?
Yes, sir.
Okay, fine. So quickly, I will just tell you what we are going to do today. First of all, we started our discussion with income from business and profession. So I told you that to run any business, there are three ways. Okay, first you have to incur certain expenses before the business starts. Okay, that is called setup expenses or pre-establishment expenses. Okay, so we have seen all those things. Then during the course of operations, that means whenever business is running, there are a lot of expenses that are need to be incurred. Okay, those have been categorized from section 32 to section 38. That is what we are going to discuss. Then uh, the third category is when the company is about to be shut down or closed down, or we call it as a winding up process. That time certain expenses have to be incurred. So what are those expenses is what we are going to see. But before we start and after we close down the business, that is not more important. But whenever we are running the business and whatever expenses we have to incur while running the business, those expenses have to be taken into consideration. So there are many expenses that a company has to incur or a entrepreneur has to incur while running this business. Some expenses are mandatory, some expenses are permissible. Okay, some expenses have to be incurred because of some unforeseeable reasons. Like if there is a loss because of a fire, then what has to be done that has to be taken into consideration, right? So all these are nothing but expenses which are related, either inclined to business, either indirectly inclined to business, or they are directly related to business. So accordingly, we had our discussion and we saw that under section 30 to 37, there are various expenses that have to be taken into consideration, like rent, repair, taxes, insurance, maintenance of plant and machinery. And one important aspect among all these expenses is the concept of depreciation. Okay, so we are going to study depreciation in detail, and whenever we are going to study depreciation in detail, we have to take into consideration many aspects. Remember, for all practical purpose, whenever you prepare your P&L account, okay, this is your expenses side, this is your income side of a P&L account. So you incur a lot of expenses. One such expense that you always incur is called depreciation. Okay, and whenever you incur an expense of depreciation, it is just a nominal entry. You don't actually incur a expense. It is just a nominal entry. Now how to pass that nominal entry is what we have to understand. Now why is this section or why is this part given so much of importance is for the simple reason, there is a main reason for this. And the main reason is, whenever you calculate depreciation, please bear one thing in mind. Whenever you calculate depreciation, if you are a company, you have to calculate depreciation according to Companies Act. Okay, whenever you calculate depreciation, okay, you have to calculate depreciation according to Companies Act, right? On the other hand, whenever you are paying tax, you have to pay tax according to Income Tax Act. Okay, whenever you are calculating depreciation, for making your P&L account, you have to calculate depreciation the way it is mentioned in the Companies Act. But if the same company is paying income tax, then in that particular case, his depreciation has to be computed in the way it has been defined in the Income Tax Act. Are you able to understand? So suppose as per Company Act, furniture is been depreciated at 15%. Okay, so you make your calculation of depreciation based on 50% calculation, but under income tax, furniture is supposed to be depreciated at only 10%. Then in such case, there's a difference in the valuation of furniture, and that is the reason we have to recalculate the entire depreciation account once again. Why? Because company says that depreciation on furniture is 15%, or Companies Act says depreciation on company is at 15%, whereas income tax authority say depreciation is on uh, at 10% only. So that is the reason there is a big confusion, and that's the reason depreciation has to be studied in detail, and that is the reason also I am going to take problems on depreciation. Likewise, you can expect one full-fledged 10 marks problem also in the final exam based only on depreciation. Now, what are the conditions that we have to follow when it comes to depreciation? First and foremost, of course, the asset has to be owned by the assessee. It is just not possible because it cannot happen that say Rashmi is the owner of a asset, or Rashmi is the owner of a machinery, whereas I claim the depreciation for that machinery. It is not possible. The asset must be owned by the assessee. Only then only then the depreciation is eligible. The depreciation should take place only in the previous year. Okay, depreciation claim should happen only in the previous year, and it can be claimed for tangible as well as intangible assets. Just give me a minute. So this is how we have to give the treatment for depreciation is concerned. So there are 3 points that we have to take into consideration. Okay, and just so as we discussed in the last class, depreciation is calculated on two methods, SML and WDV. Accordingly, we had those provisions. Okay, so whenever we come across those problems, we'll see how these provisions have to be taken into consideration. Next, we also discussed what do you mean by block of assets? How do you consider the meaning of block of assets? So there are two things, what has to be considered for tangible and what has to be considered for intangible assets. Once we know what are the block of assets, we have to calculate the actual cost of that particular asset. Now, whenever we arrive at actual cost of the asset, what are the things that have to be added and what are the things that have to be reduced or subtracted? So all subsidies that we receive from the government have to be subtracted from that cost of the asset. Okay, and if you are taking a loan or if you are incurring certain expenses to get the asset, to pay insurance, to pay the freight. I think the other day I discussed one word called as EPC, right? Erection, procurement, and commissioning. So the time the transport vehicle takes to come to take to shift the product from other factory to your factory. Okay, then commissioning is concerned, procurement is considered, the foundation bed for that machinery is considered. All those things come under the word called as EPC, erection, procurement, and commissioning of that particular machinery. So all these expenses have to be taken into consideration as far as actual cost is concerned. So when you add all this, whatever you get, that will be considered as actual cost of the asset. Clear? Next we have the WDV method. How do we arrive at WDV method? So computation of depreciation under WDV is to be considered. And one important point is, if you use any asset for less than 180 days, if you use any asset for less than 180 days, then only 50% of the depreciation has to be considered. I will give you an example quickly here. Today is 23rd November. Today is 23rd November 2020. I purchased a machinery. I purchased a machinery yesterday. On 22nd 2020, I purchased a machinery. Always remember M/C is the short form to write machinery. I purchased a machinery for, let us say, 2 lakhs. I purchased a machinery for 2 lakhs. Depreciation on this particular machinery is, let us say, 10%. Now, in this previous year, in this previous year, starting from 1st April 2020 to 31st March 2021, how many days am I going to use this particular machinery? Can somebody tell me how many days I am going to use this particular machinery? So I'm going to use the machinery for the entire month of December. So 31 days of December, next 31 days of January, next 28 days of February, 31 days of March, and I purchased the machinery yesterday. So from 22nd, leave 22nd, 23rd to 30th, that is 7 days of November. So if you take the total of, if you take the total of this, if you take the total of this, if this days is less than 180 days, then what I have to do? I'll just calculate 8 into 10, 11. Just calculate this. So I'm using this particular asset only for 128 days. So if I'm using the asset only for 128 days, then in that particular case, what I need to do is I have to check whether I have used the asset for 180 days. If I have not used the asset for 180 days, then I have to claim only 50% of the depreciation. What is 50% of the depreciation? In other words, if I had used the asset for one full year, if I had used the asset for one full year, how much depreciation would be eligible? What is 10% of 2 lakhs? What is 10% of 2 lakhs? It is 20,000, right? 10% of 2 lakhs is 20,000. I am eligible to claim depreciation of 10% on this 2 lakhs. That is 10% of 2 lakhs. But since I am using this asset for less than 180 days, I have to claim only 50% of this. That means I cannot claim full 20,000 rupees as depreciation. I have to claim 5%. 5% of 2 lakhs. What is 5% of 2 lakhs? It is 10,000. So I can claim only 10,000 rupees as depreciation. That is what this particular point talks about. Clear? Any doubts here? Yeah, any doubts here, please?
No, sir.
Okay. Now, it is no point just discussing the problem. We will actually solve this particular problem. Okay. We are going to solve this particular problem, and only then you will be able to understand what I'm talking about. Okay. So understand one thing. There are three columns here. There are three tables. One is this particular table called as asset owned.
But your voice is breaking.
Check it now.
Yes,
So
sir, your
even
voice is low.
yes, sir. It's low, sir.
Yeah, check it now. Am I audible?
Still little breaking, sir.
Okay, go through the problem first. Go through the problem. These are your assets that you have owned. These are the assets that you sold in the previous year. These are the assets that you acquired in this previous year. Okay, so just go through this. I'll tell you how to give an explanation or how to solve this particular problem. Gone through it? Have you gone through it?
So this whole thing is question, sir.
Yes,
Like
10 marks.
when it is sold, and it is put to
What happened?
showcase.
Yeah, Rohin, speak up.
The whole thing is question only, no, sir.
Yes,
Put to use owned and sold things.
yes, yes. This is only one question.
Yes, sir. Yes, yes.
Now, please understand, this is the entire problem. This problem had come twice for 10 marks. Okay. Now, if you observe this particular block that we have, okay, this particular block that we have, okay, this block is entirely the assets that we own. We have those assets. Okay. This part, okay, this part of the assets, we have sold these assets. All these assets, we have sold it. Okay. And all these assets, we have purchased it. All these assets, we have purchased it. So, and this is the price at which we have purchased. These are the dates when we have purchased it. And this is the date when we have put that asset into use. And of course, these are the depreciation rates. So now if such a problem is given to you, the first task that we have to employ is first write down what is the previous year and what is the assessment year. That is the first task that we have to do. Clear? So for all practical purpose, I have solved it in the next slide, but still I am going to tell you my assessment year. Okay, my assessment year. Okay, and my previous year. What is my assessment year and my previous year? My previous year is going to be my previous year is going to be 1st April
Sir,
2018. Yes.
so your voice is a little low, sir.
If I
It's
speak,
breaking in between, sir.
okay. If I speak more, I think without microphone, my voice will reach your home now. I'm speaking so loud. Okay, anyways, uh, check it. Is it audible now?
Yes, sir.
Yes, sir.
So my previous year is from 1st April 2018 to 31st March 2000, sorry, 31st March 2019. This is my previous year. Okay. Now, the first task that I have to do is I have to see what is the depreciation rate, what are the overall depreciation rates that I have. So I have one which is a 10% block. So this is one block of 10%. This is another block of 15%. This is another block of 40%. Okay. Here also I have 10%. Here there is a 15% block. There's a 40% block. There's a 10% and 15%. So in general, I have four blocks. One is 5%, 10%, 15%, and 40%. These are the four block of assets that I have. Clear? Now pay attention how to solve this type of a problem. First thing, I'm writing the solution. Okay, I've kept it open here. I will write what is my previous year. My previous year is 2018. Sorry, my previous year is 2018. Yeah, and 19. And my assessment year is going to be 2019, 2020. This is going to be my assessment year, and this is going to be my previous year. So I am going to write the answer for this particular question. Now, what are the various assets that I have? I have only building and plant. These are the only assets. Just cross check it. Do you have any other asset? You have building A, B, C, D, plant A, B, C, D. You have only plant and building. There is no other asset. Clear? There is only plant and building. So there is no other asset. So what I have done, I have categorized all those assets under these four blocks. So there is a building which comes under 10%. There is another building which comes under 5% block. There's a plant that comes under 15% block, and there is one more plant that comes under 40% block. Clear? So all these come under either 10, 5, 15, and 40%. There is no other block. Clear? Are you able to understand what I'm trying to tell you? Are you able to understand what I'm trying to tell you, please? Hello, are you able to understand what I'm trying to tell you? Am I audible? Yeah, kindly respond. Am I audible? Can you hear me? Can you hear me?
Yes, sir. But it's again
Yes,
low,
sir.
sir. Very low.
I don't know what's wrong. I think after afternoon the system gets tired. Now please check it. Is it okay now?
Yes, sir. In between, we can't hear you.
Yes, sir.
What can I do? Okay, I'll try to speak less, slow. Okay, see if you are able to understand. Okay,
Yes, sir.
right. So of the all assets that I have, I categorize all the assets under 4 blocks: 10%, 5%, 15%, and 40%. So these are the 4 blocks. Now, what asset comes under 10% is what I'm going to calculate. So what are the assets that come under 10%? Okay, I'll just go back. Please tell me what are the assets that comes under 10%. So building A comes under assets. See, what are the assets that I have? Immaterial of whether I purchase or whether I sell something. What are the assets that I have? I have a building which comes under 10% block. I have building B that also comes under 10% block. Any other thing comes here that is there in 10%? Does anything else come under 10% block? Does anything come here in 10% block? So there is nothing that comes into 10% block.
No, sir.
So what I need to do, I will just add these two values. I will add these two values, and whatever answer I get, I will write that answer here. This is the return down value as on 1st April 2018. This is the return down value of the assets that I have. Okay, so when you add that 10% block, this is the total that you get. I want everyone to add that. Okay, please add. What are the assets that come under 10%? What are the assets that come under 15%? What are the assets that come under 40% and 5%? Please add it and tell me.
Sir, add what? Actual cost or depreciation rate?
No, don't add. Just return down value means whatever you have, you just add these two. For 10%, add these two. For 15%, just add these two values. 15% you add these two values. 40% you add these two values. Just add it.
So for 10%, it is 15,75,000.
15,75,000 for 10%, right?
Yes, sir.
Whatever you did, check whether this is the answer that you get. For 10%, for 5%, there is no only one asset. Under 15%, there are two assets, and under 40%, there are two assets. Just check this whether you are getting the same answer. Are you getting all these answers? The values that I've mentioned in blue color.
Yes, sir.
Okay. So this is the written down value. That means this is what you have. These are the assets that you have. Now in this year, okay, in this financial year, have you purchased any assets? In this year, have you purchased any assets that falls into 10% block? Have you purchased any assets that falls into this particular 10% block during this previous year is what we have to check. So check. Okay. This is check here. Have you purchased an asset? Yes. Is it in the previous year? Yes, it is in the previous year. You have purchased this asset in the previous year, which falls into 10%. Is there any other asset that falls into 10%? Yes, there is one more asset here that falls into 10%. So this asset was also purchased in the previous year, right? Now you need to add these two. What will you add? You will add the values. So you will add 6,000 plus 2,000. You will add 6 lakhs plus 2 lakhs. So when you add 6 lakhs plus 2 lakhs, total comes to 8 lakhs. So in this previous year, you have purchased assets that come under 10% block to the tune of 8 lakh rupees. Getting it? Similarly, under 5% block, how many assets did you purchase? Is 4 lakhs. Under 15%, how many? And under 40%, how many? So you just take the total of all those assets. Just check it. I will show you the problem. Add it. Add how many assets you have taken that fall under each block and take the total of it. Total of that particular block. Just a minute. I think we lost contact. 1 minute. Yeah. Just check how many assets did you purchase and what is the value of that particular asset which fall under the same block. So I'll just go to the solution part of it. So we have purchased assets worth 8 lakh rupees that fall under 10% block in the previous year. Assets worth 40 lakh rupees were purchased which come under 5% block. Next, assets worth 8 lakh 30,500 were purchased under 15%. And last, of course, assets worth 1 lakh 50,000 were purchased under the 40% block. Clear? Now, in the same previous year, under the same blocks, how many assets were sold? So assets worth 13 lakhs were sold here. Okay. No asset was sold here. Okay. And here 20,000 rupees worth of assets were sold. Here 1,88,000 rupees worth of assets were sold. Clear? Here 1,88,000 worth rupees of assets were sold. So when all these, this is what you have, this is what you purchased, and finally the red color values tell you this is what you sold. So when everything is removed, how much is remaining as on 31st March 2019? Remember, this is our previous year. Our previous year is going to get over on 31st March 2019. How many assets do you have now? So you add these two, value, and whatever answer you get, you subtract it from, subtract 13 lakhs, subtract this value, subtract this value, subtract this value for all this. Okay, you will have a problem here. When you add this, some figure comes here, and you cannot subtract whatever answer that comes here, whatever answer that is going to come here, you cannot subtract 1,88,000. Why? Because you have sold that particular asset, and you have sold that particular entire block. That is the reason there are no assets here. You cannot have a negative sign. Either you have the asset or you don't have the asset. It is not that you have a negative asset. No. So either you will have no assets or you will have some assets with a positive value. Okay. So this is zero, means you have completely sold out that particular asset, right? So once you have sold out that particular asset, now we will calculate depreciation. So on this amount, 10,75,000, which is a new written down value as on 31st March 2019, calculate 10% on that. Similarly, calculate 5% of this. Similarly, 15% of this. Of course, there is nothing here still. So once you calculate, you will get, okay, 1,07,500, 22,000, 1,38,000, and so on. Clear? Now, if I want to find out the total depreciation that I am eligible for, okay, I have to write under 10% how much I am eligible, under 5% how much I am eligible, under 15% how much I am eligible, and under 40% how much I am eligible. So totally in that particular previous year, you are eligible to claim a depreciation of 2,68,040 rupees. That's it. You cannot claim more depreciation. Clear? So the problem is actually very simple. Only thing is, the main idea here lies in creating these blocks. Once you create these blocks, it is just a mechanical entry that you have to pass in and then get the final answer. Clear? Any doubts in this? Any doubts in this, please?
No, sir.
Okay.
No, sir.
I'll stop the class here. Okay. In my next class, I will continue. I will first of all send you all these problems. Okay. And in my next class, we'll continue from where we have already stopped. Okay. Just come here online.
Sir, please send that capital gains problem, last 4 problems. Capital gains.
The one that I solved.
Yes, sir. Yes, sir. Last capital gain 4 problems you have solved, no, sir.
Okay. Those problems. Fine. I'll do that.
Yes, sir.
Fine. I'll do that. Okay. And tomorrow I want to meet everyone for in the first class. Okay. Those who have taken HR and marketing, please pass on this